In terms of the agenda, we will be covering what's different this time in terms of MTD following the previous delay, who Making Tax Digital for income tax applies to, and when those changes are going to come into effect, the benefits to you as a taxpayer, because there has to be some, right? So we'll find them and we'll dig them out for you. And we'll go through the process of how to choose the right software. There'll be some time for Q&A at the end. It's probably worth mentioning what we do cover today is subject to any further change, and HMRC are regularly releasing guidance around MTD for income tax as we go along. So please pay attention to everything we cover today, but also any announcements that may come out at the same time. That being said, what better way to make sure that we do give you the most up-to-date information by actually having HMRC on the call today. So without further ado, let's make a start. We're going to talk about MTD for income tax first thing this morning, and it will set you up for your day. So let's do the obligatory introductions while people continue to join. My name is Russel Frayne. I'm Director of Transformation here at Gravita. As well as working with businesses and implementation and adoption of accounting technology, I've been part of MTD now since its inception back in 2015. So fairly well versed in MTD itself, MTD for VAT, and previously rolled MTD for VAT out across a very large national firm. I should mention, obviously I'm from Gravita, and the Gravita team here are a high caliber, pragmatic accounting firm, tech enabled with our focus, but also putting people at the center. We partner with businesses and people with the skills and expertise to manage our clients' growth ambitions. We expect and innovate practical solutions to help businesses reach their goals. And it sounds like a perfect time to hand across to Lenny to give himself an introduction.
Good morning, everyone. My name is Lenny Barry. I'm one of the stakeholder managers on the external communications, external readiness team. We are the people who you will normally see on webinars or at events like Accountex. We answer your questions wherever possible. If we don't have an answer, we'll go back and find them. I came through MTD VAT. That had its challenges, but it got delivered quite smoothly. It was delayed by the pandemic. Now we're on to MTD for income tax, which we recognize is a much bigger, more complex task, but we are on schedule and we are good to go.
Perfect. Thanks, Lenny. So now that we've been introduced, I would like to start with an initial poll. So David, if you could bring the poll up on screen, and if you could just please answer the very first question, which is, how confident are you on the subject of MTD for income tax and being ready on time? And I will just leave a couple of moments for you all to vote. For those of you that are joining today, you're here to get further clarification around that.
So Russell, it's 4% very confident, 30% confident, 45% undecided, and 20% not confident at all.
So Lenny, you would have seen a lot of this come up in conversation, I'd imagine, at different events. And would you feel that's a common spread of results?
Yeah, I mean, people are coming to terms with the fact that this is going to happen. It's 1 year out, so people's attention has been piqued, and there's clearly an increase in people coming on to webinars such as this. HMRC have started their own webinars. We're getting 1,000 people on each webinar, and they just want information and they want to be clear what needs to be done. They might not agree with it, they might not want to do it, but at least they're getting the facts. So 4% very confident, that's brilliant. At 45% undecided, that's my target audience today. And the 20% who are not confident at all, we can drag them up that table, I'm sure.
Yeah, absolutely. And, you know, just from my take, going to different conferences, speaking to different client bases and other practices as well in the industry, like that's all very common. Our task today is to bring those 65% that are undecided or unconfident to be a lot more confident, at least around this. So let's jump in. We've both just said that we've been part of MTD now for many years, and the program itself has been subject to many delays. which I personally think has caused many to switch off to the proactivity around MTD. So for me, that poses the first question, which is what's different this time? And I'll give my take on that quickly. And then Lenny, if you give us some insight from HMRC's side as well. For me this time, very much the campaigns that HMRC have been putting out and the coverage is a lot more significant this time and a lot earlier. Last time when we were talking MTD, there was very little in the tabloids, very little going out to the taxpayer. HMRC have now been contacting the taxpayers with letters that went out and have been going out in April. And we've seen some of those landing on our clients' desks as well, which is good because it's sparking the conversation at least. So it's having the right behavior. You're on about your 7th or 8th roadshow at the moment, right? And I've just seen, the guys in Edinburgh, in London and other places as well. Again, we didn't have a HMRC out on the roads previously pushing this, which left a lot of us wondering, previously, was this going to be delayed? The other thing, and I was in London recently at an MTD event with HMRC, and we were invited in, and they actually had James Murray there, who is the MP and ministerial representation that is backing MTD, and he gave a very clear picture around MTD, the fact that they didn't just continue with the rollout, they actually took a step back, reviewed whether it was the right thing to carry on with or not. And they did make some changes. So obviously, we've previously seen the 10,000 to the 50 and 30, but then in the spring statement as well, they announced the 20,000 as well. And the view is to continue reviewing this as well. So it isn't just at that final cutoff. So for me, just those few things alone have really been given the indication like it is going to happen this time. And as well as the other questions that we had as agents around things like multi-agent access for submission, where you've got dual accountants or bookkeepers submitting and reviewing, like these were all questions that we all had last time. So I don't know, Lenny, if you want to give us a HMRC view.
Yeah, thanks, Russell. It's been a challenging road. 2015, Chancellor Osborne stood up in the House of Commons and said, MTD will see the death of the tax return. So that was a great soundbite, got him on the news, and then it didn't go according to plan. So I'll be honest, we wanted to do VAT first because the VAT audience were used to keeping records, they were used to submitting quarterly, and we managed to convince the Chancellor 2 years later that we should do VAT because it was relatively simple and straightforward. It's 9 boxes, off it comes, it's easy to do. So we launched MTD VAT 2019. It was supposed to be finished in 2020, but the pandemic came and that really hammered us. So not only did we delay VAT, we finished it in 2022, but we lost 70% of our technical staff, our designers, our developers, our builders. They were taken, and from other programs as well, to work flat out on the furlough scheme, the self-employed income support scheme, all the things that were necessary to keep people in employment, to give them money to live on during the dreadful pandemic. Now that completely threw us. There was no way we could meet our 2022 target. That was delayed to 23, was then delayed to 24. We still couldn't catch up. There was too much to do. And the government decided in 2024 to delay to 2026 to make sure that we and taxpayers and agents would be ready. So the problem we have is, I guess, a credibility problem. So it's like the grand old Duke of York. We've taken you up the hill and then we've not gone over the top and we've come back down. Now, I don't know what I can say to convince you that we are ready. And I would say we are definitely ready. We are ahead of schedule. We will do all we can. If something goes wrong, there's bound to be things that go wrong. But if something goes wrong, we'll just simply cut something out of the delivery to make sure that we're on time for April 26th. So, I mean, today, we could actually go live today for Making Tax Digital for income tax, for landlords and self-employed people. That bit is built and ready. The bits that aren't all ready are the end of year bits. So if you're self-employed, and let me think, if you're self-employed and you have a time to pay arrangement, that's one of the big things that doesn't let people in just now. We haven't built that yet. That's not due until November, but it will be ready before April 2026. So in the spring statement, the government also announced some deferrals of certain categories. So those with the married couples allowance, those with the blind persons allowance, those who are ministers of religion, those who are Lloyd's traders, then those were deferred because small numbers though they're a very complicated bill because it all has to be integrated into the self-assessment system as well as Making Tax Digital. And we took the decision that we'd rather make sure we have the resources available to do the big ticket items that affect the majority of people rather than, I don't know, I think there's less than 10,000 ministers of religion, important taxpayers though they are, but the 10,000 in comparison to the 1.8 million is a small number. We need to be ready for the 1.8 million. So hopefully people are now getting that message. As you said, the minister is very supportive. I mean, last year, 2024, at every event, agents would come up to me and say, there's going to be an election. I said, that's absolutely right. There'll be an election before January 25. Admittedly, it came earlier than we expected in July, but it's a case of people would say there'll be a change of government. That's democracy. A Labour government will come in and they'll shelf this. And I said, I don't think so.
Yeah.
So I know there are agents every night praying for another delay, but it's simply not going to happen. So James Murray is the Exchequer Secretary. He's our minister. He really took us to task about what were the delays, what's caused it, convinced me that you can get this done on time, the business case, the benefits, the doorway to the future that Making Tax Digital provides us means that we can change HMRC in terms of how we use technology, how we improve our customer service. And I know it sounds like jam tomorrow, but we have to start somewhere. And we know that we can do better. And that's what we want to do. So the minister said, yep, that's fine. I'm convinced. It took him maybe 3-4 months to really go through the paperwork and ask questions. And not only was he happy with the 26 and 27 mandation dates, but as you said in the spring statement, it was announced that the threshold would be brought down to 20,000, and that brings in another 2 million taxpayers into Making Tax Digital. That's how confident he is that we can deliver it.
Yeah. Fantastic. And I think it's almost like we prepared these slides in advance. So you've covered off quite nicely the history around MTD and the roadmap. But I do think it's quite good to jump into this. David, if you could just bring up the next poll question, which is, from your perspective, what sources of MTD income do you have? And that will either be the self-employment income, as Lenny mentioned, property income, or both. And there are complexities around, each one of those as well. And we'll come back to those results in a little moment. Lenny, you mentioned obviously the history there. We're currently sitting 340 days out away from that sort of start date from MTD today. And like you say, that sounds a lot. I'm obviously in practice. And from a practice perspective, when you talk about 340 days to go, with everything else that's going on, summer holidays, school holidays, Christmas, tax season, and also the numbers involved, like there are practices out there that have more than 340 clients this is going to affect. And you can't talk to one client a day and get all of this done and in place. So it's very important to put this into context that yes, the roadmap is here. it's 340 days. We are currently sat here in May 2025. But if we look at the criteria around this just for a moment in terms of who is in and when, as you mentioned already, and I think everyone's kind of familiar with these thresholds. So we've got the 50,000, the 30,000, and the 20,000. And I think at this stage, it is also worth mentioning that partnerships, and again, jointly owned property isn't a partnership, it's jointly owned property. And companies are still on the TBC list with HMRC. Again, with regards to the whole MTD program, we're bringing more taxes into line with making tax digital as well. Those three mandation dates, as you mentioned, is going to bring something like 2 million taxpayers into scope between 2026 and 2028. If we look at the requirements there, it's self-employment income. And the key here is it's income and not profit. If we jump to the next slide, we're looking at this window here of those sort of three mandation dates. I think we can talk through these and just go through them a little bit more as a statement of fact to be really clear for people. So that income assessment is going to be on your 2024-2025 tax period. Now, the key part there for me, and obviously maybe a bit skeptical and naive being in practice, a lot of taxpayers, especially if you're self-employed or you just have property income, tend to maybe leave their tax returns to the later stages of that year, in which case you might be a little bit blindsided with your income threshold. So again, just being proactive, especially if you're sitting around that 50K threshold or maybe potentially you've had a property for part of a year and not a full year, just to understand where your income sits, because that allows you to be a bit more proactive. As mentioned, it's income, not profits. I think that gets confused a lot, Lenny, from definite conversations that I have, because the taxpayer's kind of angle is, but my profit's only X. Why do I have to do all of this? And it's based on the income, ultimately, not the profit. And it's both income streams. So again, it's both self-employment and property, as opposed to treating them separately. And again, I think that's one that's easily missed. Looking at the poll results there, we've got 14% with self-employment, 14% with property, and then 72% with both. So for those of you that do have both income streams, it is the aggregated total of the revenue from each, as opposed to treating them separately and independently. So don't get caught out by that, of course. If you do have joint property, then it is your share of that income only. And again, just be really clear on that it is your share of the income, not the total income from that property. The property UK as well is UK and foreign property. And again, talking to lots of people in their head, they're just thinking UK based, not taking foreign property into consideration as well. As mentioned, the partnerships are not in scope. A couple of other questions that normally pop up at this stage. The maintaining of digital records, it does include spreadsheets. So we'll cover some of the digital stuff off in a moment. It does include spreadsheets, and there are different complexities around taxpayer requirements. So for some instances, spreadsheets are absolutely fine. Personally, my view is we use this as a springboard to improve your record keeping and also the insight and awareness that you have around your revenue, your profits, and ultimately your tax obligations. And if I take any of my learnings from MTD for VAT away, then the clients that we moved onto digital records and cloud accounting solutions adopted and adapted a lot better. Those that relied on spreadsheets as practices and advisors, there was a lot more teething because you've got so many different variations of a spreadsheet to then go into an MTD sort of compatible submission tool, that it was causing a lot of issues. But that being said, they are still an option. It's quarterly updates, not quarterly payments. And I just want you to touch on that in a moment. And then finally, it's the submission of that annual digital tax return at the end. So the terminology here is quite key, which is why, Lenny, I reached out before this one, because that's changed several times. It's been a final declaration, it's a tax return, it's X, Y, and Z. But that is the aggregation then of all of your quarterly submissions with your other sources of income as well, and any adjustments to those quarterly submissions at the time. But we'll talk about the submissions in a moment and the quarterly updates. But just around that, in terms of giving people some reassurance, and again, those are less confident with the MTD side of things, anything there that you really want to reiterate, add, but also that one around the quarterly updates, not quarterly payments, I think is a key message to come from HMRC.
Absolutely. There's a common trend on questions that we get. So the number one question we get, is it turnover or profit? And it is gross income, it is turnover, not profit. A couple of years ago, more people knew more about MTD for a while, and then the delay came in, and understandably, it goes on the back burner and they forget things. And that's why it's really important that partners such as Gravita, other agents, professional bodies, software developers, and HMRC ourselves have ramped up our webinar offering to try to get this message out there as quickly as possible and as clearly as possible. And it's just Chinese whispers, and we need to make sure that people have clarity. And again, I'm honest enough to say you might not like the answer, but at least you know the right answer and you can plan accordingly. So it's a case of, yeah, absolutely, it is turnover, it's not profits. Quarterly updates. Again, one of the common questions. So when is quarterly payments coming in? And I can say, hand on my heart, we have not been asked to plan for quarterly payments in Making Tax Digital. We haven't built it. It's not there. If a government of any persuasion wanted to change the payment timescales for self-assessment, they could do that at any time. It's a relatively simple legislative change. They bring it in for the following tax year, and they just make that through a simple procedure in the House of Commons, but nobody's ever done it. I guess it's not popular. When self-assessment came in, that was the sweetener, I guess, if you like. So your tax year finishes on the 5th of April, but you don't have to account for it and you don't have to pay until the 31st of January, 9 months later. So to change that, then you'd be impacting people's cash flows. But sometimes, well, two things. One, I'm not convinced all taxpayers are aware that you can file your tax return at any time during the year after the 6th of April, but you do not have to pay it until the 31st of January. So this year, 1st of January, we haven't received 5 million returns. We're still waiting on 5 million. January the 31st, we received 732,000 tax returns on the last day, including 42,000 between 11 p.m. and midnight. I honestly do not understand why people leave it to the last minute. So Barclays Bank had a problem and that caused chaos. Now, we are reasonable people, no matter what you might think and what you've heard. If there's an outage with a bank on the 31st of January and you can't make the payment, yes, it'll trigger a default, but you would phone us up and say, I banked with Barclays, I couldn't make the payment, I was trying. We will get that information from Barclays confirmed, and then we would not impose the penalty. That wouldn't be reasonable. And they said HSBC, because they saw on the news it was Barclays, they just thought they'd try their arm. But that wouldn't be accepted as a reasonable excuse for not submitting on time.
Talking about excuses, I think I've got a few questions here that have popped up. We've got quite a lot to cover and we've got 30 minutes left. So let's just jump through these questions. So we talk about excuses, exemptions. So I've got a question here, like, are there any exemptions and do I have to do this?
Well, it's mutually exclusive. You either have to do it or you get an exemption. So exemptions, as with MTD VAT, there will be an exemptions process which will come in the autumn. Again, we give a generic view of what those exemptions might be. Personally, I don't like the fact that we say age, because the next question is always, so at what age could I be exempt? and there isn't an age. If you're thinking of applying for an age exemption on its own, it is highly unlikely to be successful. If you said, I'm 85 and I have certain conditions that make it difficult for me to do digital records, or I live in a remote area and there is intermittent broadband, then certainly those conditions would be looked at. An exemption could be awarded. If someone in self-assessment is VAT registered and they already have an exemption for MTD VAT, that will be carried forward automatically into MTD for income tax. So the criteria will be published in the summer. It should open in the autumn, and it is a written process. So you'd be sending in a letter saying, so don't write in saying, I don't want to do it. That's not going to cut it. I am unable to do it because,
Yeah.
and then I'll be honest, just put the kitchen sink into it. So I have arthritis. I don't own a computer. I don't know how to send email. And there are people who meet that condition. Then that's the ones that will be given and they're all treated on an individual basis.
And then on the VAT side, I have another question here, which is I'm already VAT registered for self-employment. So currently filing MTD for VAT, do I fall into this as well? And then there's kind of a follow-up question, which means, do I also need to now submit my rental income quarterly at the same time?
So if you're VAT registered, you could have registered voluntarily. So you're below the 90,000 threshold and you've registered voluntarily. So for MTD, for income tax, it's about your level of qualifying income. So the
So he's already registered for VAT. He's already filing MTD VAT returns. Does he also have to file MTD income tax? And does he now have to, as well as filing his VAT return, file his rental property income at the same time?
So I don't know what his self-employment income is, but if his total income...
Assume it's over the VAT threshold.
So if he's over the VAT threshold, then yes, he would be coming into MTD for income tax as well. And he would then be submitting his quarterly update for his self-employment and a quarterly update for his property business. So that people say, well, I have to do two separate ones. That's what you do now in the tax system. You'll do an SA 103 and an SA 105. Now, people always say, quarterly updates, what a faff. The quarterly updates themselves are relatively simple and straightforward. The tricky bit is digital records. So if you are a client who is keeping paper receipts, then that's not going to cut it. You will need to keep digital records. Digital records could be kept in bookkeeping software, accounting software, or in a spreadsheet, provided you have all the required information. The spreadsheet could be your digital records, and then you could use a bridging product, which is comparatively inexpensive, and submit the quarterly updates. You would then, at the end of the year, we would present back to you in your software, here are the figures that you've given us from the quarterly updates, and we can now pre-populate. MTD will be able to pre-populate a lot of information that we already hold. So if you have PAYE income, if you've got pension income, if you've got benefits income, we can pre-populate that into your digital tax return. Yes, of course, you can check it. Yes, of course, you can say it doesn't look right and you can contest it, but that will save people a lot of time over the entire self-assessment base. And it's a case of it should make the tax return quicker and it should make it easier.
For me, the VAT question is an easy one. If you're already filing VAT MTD, the software that you're using, I can't say for sure, but more often than not, will be MTD compatible for income tax. So that submission becomes a very easy click of a button. The question is then, how do you then report your rental income, and how compatible is your existing software to deliver dual revenue streams as opposed to that single. I think it is worth mentioning, though, that the VAT quarters, so why I jumped ahead to this slide, is in terms of the quarterly updates, what they look like is 4 quarters where we submit our income tax information. But those quarters are aligned in this way for income tax. And that may not be the same for your MTD for VAT submissions. So we could have the scenario where you're VAT registered, you're filing in a non-conterminous way for income tax. So you'll be making your VAT submissions at a point in time. Your MTD for income tax submissions will need to fall in this cadence. So there will be a slight discrepancy. That being said, your software that you're using for VAT should be compatible and it should be a click of a button. We'll show what that looks like in a moment.
So for MTD for VAT, because it was a relatively simple software build, we had over 600 products appear for MTD for VAT. It is highly unlikely that the majority of those products will be compatible with MTD for income tax. Currently, we have 19 products and we're expecting 25 products to be available for April 2026. So if you have a product for MTD for VAT, it is highly unlikely it will be compatible for income tax unless it's one of the big players.
Yeah, that's a fantastic point, actually, because we did see a lot of this stuff come out of the woodwork when the run into MTD for VAT. All of a sudden, like, and that's part of the challenge, right? Is we've got so many clients on different random things. So yeah, absolutely. And do make sure that you review this ahead of time and don't just assume is the key. Moving on to these quarterly updates. So these are the quarterly windows that they fall into. Very much like the VAT submission dates, you'll have a month and 7 days following the end of your quarter to submit that quarterly return. The reason why I highlight the purple squares and one of the behavior changes with keeping digital records is that if you keep your records up to date through each quarter, that submission at the end of your quarter is essentially a couple of clicks of buttons. Whereas if you just leave everything to the end of the quarter and try and cram everything in, you're then trying to recreate that quarter in 1 month to then file within that month and 7 days. And again, we saw this with MTD for VAT, where that behavior change, and I used to have it where clients were waking up in the morning, having their morning coffee and breakfast, reconciling their 5 or 6 bank transactions. It's such a good habit to get into. For me, MTD is about the technology side, less about tax, and it's about changing those habits and behaviors. And as mentioned at the start, we've then got the annual digital tax return, which is still then due by the 31st of January. It's worth mentioning that these quarterly updates are cumulative. They are not standalone. And this again is another change with the MTD guidance, because you do your 4 quarters, they are individual standalone. And if you had to make an adjustment, you had to go back to a previous quarter and make the adjustment in that period, which seemed mad. And there was, I would probably say, Lenny, a fair bit of feedback that went around those. And now, obviously, it's great to see that they are cumulative. So each quarter, so whilst I've got it staggered this way, the reality is that the second submission actually covers April to September. The third quarter covers April to December. And the fourth quarter will cover April to, I've got March there, but it's to the 5th of April. So 6th of April to the 5th of April. So it covers the 12 months. So any amendments you just make in your next submission. So they've really simplified the requirements there.
Yeah, and just to say that we do listen, we do get feedback from the professional bodies and large agents, and we did listen throughout. We did a consultation in 2023, and we made several significant changes on the back of that feedback, cumulative being one of them, and I'm sure that people appreciated that.
Yeah, we definitely did as agents, because the messaging to the client became a lot easier, rather than you make 4 quarterly submissions rather than potentially significant multiple submissions if you're having to make errors. So it really did help. The one thing I suppose I didn't mention there as well, we did touch upon it with the submissions, is that these quarterly submissions need to be made through MTD compliant software. You cannot make these submissions through HMRC online, and HMRC won't be providing software or submission tools to enable these submissions to be made. do check, because there is a list on HMRC's website of providers. If you speak to us at Gravita, we'll be able to tell you which solutions we're preferring and recommending in that space. But do speak to your advisor, because it will be absolutely key in terms of those choices. In terms of the quarterly updates, Lenny, just quickly around what happens if we get this wrong. So obviously we said errors can be corrected, but I suppose two questions. So I did ask this first question actually direct to HMRC myself, which was, if I submit 4 quarters and my annual digital tax return is vastly different to what I've submitted each quarter, is that a red flag for HMRC? And the answer was categorically no. And especially in these early years, it's about that behavior change in the submission and improving that submission through each quarter. And as we go along, the submissions will become more and more real, up to date, and more reflective. And that indicative tax liability that you'll see throughout the year becomes more and more relevant. So that was great to hear direct from HMRC. But also just quickly in terms of penalties, because that question's also popped up. If I miss a quarter or I miss a filing submission, are there any penalties around this?
So in any tax regime, there has to be penalties for non-compliance. So if someone comes into the testing program in 25, 26, there would be no penalties for not submitting a quarterly update, but there would be a penalty for not submitting your tax return, as is the case now. When mandation comes in April 2026, the penalty regime would be, if you do not submit a quarterly update, you will be issued with 1 penalty point. If you reach 4 penalty points for quarterly updates, then you'll be charged, you'll receive a £200 penalty, and it'll be £200 every time thereafter until you're back into compliance.
Points, how long do they last for?
So the penalty points will last for 2 years, but they drop off a bit like points on your driving license. If you're compliant, they'll drop off, and very quickly you can get back to a good state of grace. So the penalty for late filing, if you file on the 1st of February, you get a £100 penalty. In MTD, you'll get 1 penalty point. If you get 2 points for late payment, then for late submission of the tax return, you'll get a £200 penalty. So you're effectively being given a free year in comparison to now. Everything is based upon if you are compliant, if you are submitting what you should be submitting, then you won't get penalty points and you won't get a fine. Or in relation to the quarterly updates, my firm belief is that people are not going to get this right. It is going to be inaccurate. We know that it will improve over time. So therefore, when people say to me, can we just put zeros in? Well, yes, you could, but that quite clearly is saying, I'm not playing the game.
Problem then as well, aren't you?
And in time, we might do something like send you a letter saying, this doesn't look right, please cooperate. If someone said to me, my electrician is an £80,000 a year business, can I estimate and just put in £20,000 each quarter? Well, yeah, it's not doing what we want you to do either. It's better than zeros, but there's no digital records behind that because you've just made it up.
Yeah.
So
I
that
think
is
that's
also
where
deferring the problem.
the mate down the pub
Yeah.
influence will be. Is like, oh, I don't submit anything at all. They would kind of be just like, I'm not dealing with it, but they won't tell you about the problem at the end of the year.
Yeah.
Well, I'm kind of moving on to this slide. And David, if you want to launch the next poll, please, quickly. And the poll question this time will be, how aware are you of your tax position before preparing your tax return? Now, this isn't after filing it, because obviously everyone knows the tax position after they filed the return. But before you start preparing that tax return, how aware are you of your tax position? And I've been in practice for way long enough now where I've heard enough of the excuses or reasons behind, I didn't expect my tax bill to be this high. I don't have the money to pay that. I wasn't expected to be that much. There's no money in the bank account. Why is my profit so high? I've heard all of the scenarios. And with MTD, what those quarterly updates do give you, if you're if you're playing the game and you're doing it correctly, it will give you those tax estimates to give you an indication, and it won't be perfect. That tax estimate every single quarter will give you an indication of what that year end's looking to be. Now, from an agent's perspective, this is kind of where I saw MTD for VAT sort of changing this space, is that yes, we took the compliance element, but by front loading the digital record keeping, it allowed us actually to help improve the way people ran their businesses. And these are just a few areas that we saw, which was they had a lot more insight into their profit as opposed to just looking at the bank account and thinking, I've got a lot of money, I must have a high tax bill, or I've got no money in the bank account, I can't have any tax to pay. The other thing that we did, and all of our solutions for MTD at Gravita will enable our clients, and this is more in the self-employed space, to be able to invoice directly from their software and also to have a payment link to get paid immediately. Now, for MTD for VAT, this helped our clients a lot in terms of improving their cash flow, which meant, and the numbers were, it was about a third faster to get paid if I sent you an electronic invoice with a payment link, because the majority of clients then just dealt with it there and then. Whereas if I sent paper or an email, it gets deprioritized to later in the day, forgotten about, and then you go through this sort of chase cycle. So using this as a springboard to improve your record keeping is a great opportunity. Now, if I just jump back to those poll results quickly. So in terms of the awareness, some of you, 31% fully aware, 58% have a rough idea. It'd be interesting to see where you have a rough idea, how close it is to the actual. 9% said no idea at all, and 2% if you like surprises. An interesting spread there. Just in terms of the software, and we've talked about it, Lenny, already, like there is no one size fits all to this. And I think some practices are going down a one size fits all. But for me, I think the biggest thing, you talked about age on exemptions, is for me, MTD, I think is a great concept. I think the difficulty is we're working cross-generational. So whilst the statement is, it's probably the biggest change to the tax system in a generation, we are working cross-generation. So we do have, digital natives coming into the tax system now currently. They get this, they want everything online, they want it all digital. And we've got people, at the end of their sort of tax paying life as well, falling into this, where they didn't ask for this and they don't want it as well. So for me, it's that one size fits all. It isn't an option. And the way that we look at it here at Gravita is a bit like a pyramid. So I love pyramids with this sort of stuff. And when we talk about those sort of tools that are MTD compliant or not, like these are just an example of a few that we work with. Let's just talk about the minimum bar. So like saying, if you are in that sort of bracket where you just want to be compliant, the minimum bar, like we talked about, is an MTD bridging solution. We can either do that yourself, we can enable it for you as an agent, but that is the minimum compliance threshold. Like you complete your digital record keeping and you submit using that solution. Now, if we then just layer it up slightly and go, okay, but we're also just looking at it from a landlord perspective. Landlords, I think, have one of the most significant changes here because they're not really, if you're an incidental landlord, treating it like a business. And I think the concept around it being business turnover, it's rental income, and it's not a business. So it's a simple solution for a landlord-only client, especially where it's just you submitting on your own. Now, where the complexity comes is where you've got mixed ownership. So how do you have the ability to make those updates for separate owners, either in a single platform or across multiple platforms, depending on who you own that other property with and their tax circumstance as well. So it starts increasing in complexity. Self-employment, I always think the ability to improve your operations and allow for growth. Because if you set a minimum bar here and all of a sudden your revenue kicks you into being VAT compliant, you're then more than likely going to have to change the way that you work to deal with your MTD for VAT requirements as well. So it's always worth looking at that as you sort of look to grow and scale your business. We then talk about dual income streams. So at the very top there, where we've got both. And when we went to the poll at the start, a significant proportion of you, the majority, had both income streams. So your software needs to then be able to deal with either those two submissions in one platform, potentially with mixed ownership, or you need two separate solutions. So this is why one size fits all doesn't work. And then at the very top, like with a lot of these software providers, there's an ecosystem around the outside to help with all these other complexities. This software decision part is very key, which is why it's less about tax and more about being able to deliver that. Now, in terms of how hard is it, this is just an extract from Zero in terms of that submission, which you can see in the middle of the screen there. You've got the indicative tax calculation, your tax quarterly update in the middle there, which then will then pull all that information into the boxes for HMRC, and you then click submit. Now, the challenge is the data behind those numbers and getting that data to a point where you can make that submission easily. Which then brings me on to what we're doing for our clients. So we have 3 steps for our clients. We either do it yourself, do it together, or do it for you. So in terms of do it yourself, we'll provide you with MTD compliant software. We'll make sure that that's set up and trained. We'll make sure that you're supported and have resources to be able to deliver MTD in a compliant way. We can do it together. So there's some clients that will want to be able to maintain their digital record themselves, but want the comfort blanket of us reviewing the data and making those quarterly submissions for them. So we can absolutely enable that for them at the same time. And then finally, for those that either don't want to or can't, then we can do it for you. So offer the solution where we actually deal with the processing of that quarterly information, as well as then doing those quarterly submissions for you. So we try and make it as easy as possible for our clients. Now, I've mentioned earlier on that we're 340 days out. So the big question is, what do we do next? So then I've seen HMRC do a slide like this, very similar for practices. And this is quite, I would call this quite a conservative 11-month roadmap, to be honest with you. But if we start thinking about MTD, you have 11 months to deal with this before that go live date of the 6th of April 26. If you can assess your eligibility following this webinar and work out which income banding you sit in, and especially if you do sit in April 2026, then I do think that you should then start looking at the solutions available to you, speaking to your advisor, understanding, going back to that complexity structure, where you would fit and what would work for you. Then look to sign up for MTD. Now, what that means is you're not going to have to make quarterly submissions right away. I mean, you can sign up and go and join the sort of the beta that HMRC are in at the moment, and you can make quarterly submissions if you would want to. But the key here is to give that window of opportunity for you to understand your requirements, make sure that you're set up, select your software and your process. We will need to set up and migrate information, get it set up and configured for you, train you as well at the same time. So none of this is quick. And as well, just selfishly, like your accountant and advisor will be doing this for a number of clients as well. So like if you want peace of mind, get in early, I would say. And then for me, it's about having a period before the deadline to go live on your chosen software. So what worked really well for MTD for VAT is where you had at least a 6-month run-in to go live before you had to make those submissions. And it worked really well for those clients. Those that left it to the last minute, if you wait for your 2025 tax return to be submitted in January, you've got 2 months to do all of this, and your accountant won't thank you. So hence the reason for the webinar today, and obviously the messaging with HMRC and all the roadshows they're doing is be prepared and be proactive in this space. If you want to contact us, we will share these slides afterwards, of course. So do please feel free to reach out to hello@gravita.com or contact one of our local offices. As mentioned, we will be sharing some information here afterwards. There was a poll, actually, one final poll that I did want to run just before I finished. I can't remember, David. If you can just share it on screen for me, please. And I will just go back to, it's all to do with the software, just to understand how you're currently managing your record keeping, because that is one of the key considerations as well that I should have talked around earlier on. Obviously, there is that challenge then in terms of the complexity of the submissions and based on your income stream. So if you just complete that poll for me, that would be really appreciated. We will share the poll results following the session, as well as the slides and everything at the same time. Lenny, thank you for joining.
Very welcome.
There will be questions that we'll deal with. We will include them in the FAQ document as well. We will share everything at the end of this. anything that you want to add as a final word from HMRC?
Thank you for the opportunity. Hopefully, we've given some clarity, some reassurance. You may not like it, but it is going to happen. And as Russell said, the earlier you start to think about getting ready, then the easier it will become. Obviously, we are biased. We want people to come in to the testing program this year, and we give you enhanced support to do that. So if you come in to the testing program for 25-26, we give you a dedicated helpline for Making Tax Digital. Some of our best advisors who work on self-assessment and have worked on MTD VAT, so they know everything there is to know, and we can get this sorted for you. If you are interested, please speak to your accountant, speak to Gravita. We'd love to have you in. I've answered all the questions in the chat. One's just come in, I'll answer that now. And if you have any other questions, please come back to Gravita, and Russell and the guys will send them on to us, and we will do everything to make sure that we get you the information so that you know what exactly is required and you're able to be compliant. That's all we're asking for, is let us help you.
Perfect. Thank you, Lenny, and appreciate you taking time out today. Just on that final poll, 32% of you said that you're on cloud accounting software already, which is great. But as Lenny highlighted, do make sure that you check that that will be MTD compliant for income tax, even if it may be compliant for VAT. 10% are on desktop or bespoke software. And again, this is a bit of an area where you really do need to look at. And again, one of the areas where I find bridging solutions are an option, especially if you have a bespoke platform as well. 40% on spreadsheets. 10% have admitted that it's either manual or all over the place. So again, there's definitely some challenges there. And then finally, 10% of you just give all of your paperwork to your accountant at the end of the year. And again, like that's where I see. So there's 60% of respondents there, which are either on a spreadsheet, manual, or just throwing paper around. So do take it as an opportunity to be proactive, do have the conversations, do reach out early. And I very much look forward to having all the conversations with the Gravita clients as we move towards April 26. That's us. Thank you, Lenny, again. And we will follow up with the questions and the recording and slides following today. Thank you, everybody. Have a great day.